Good morning. My name is Axel Ingvaken. I'm an equity analyst for ABG, located out of Oslo, and I have been covering gig for several years, and I'm super excited today having Petter Nylander, chairman of gig, presenting for us today, and also the group CFO Tore is here. So I will leave it at that, and you can take us through, Petter.
Thank you so much. Thank you for having us this morning. So as you heard, my name is Petter Nylander, chairman of the boards of Gaming Innovation Group since December. And this was prior to our ambition that we also succeeded with to be listed also on Nasdaq Stockholm. I will give you a short business overview, a little bit of how we see, given that some of you in the room are maybe not been investor or not recently investor in the sector, the market dynamics and trends, some key takeaways zooming in on gig, our latest report on Q3, including the financial results, and then summary, and then I'm open for any questions you might have on in the industry or on gig. But I will start by zooming out. We are standing today in Sweden, in the middle of Stockholm, and it's been a very dynamic year when it comes to iGaming or online gambling in Sweden, given that Sweden has re-regulated since 1st of January. So that has had a big impact on the Swedish geography, and given that many of the strong brands in the sector actually have headquarters or management or entrepreneurs or founders or investors from Sweden. I think Sweden has been giving a lot of sort of headlines around this. So, but if we zoom out, I've been in this industry myself for 20 years. Started when I worked for Kinnevik, being in the board of Cherry, Net Entertainment, and Betsson. But what you can say about gambling is that it's a very old industry, and it will be an evergreen industry going forward. This has been part of the leisure industry for thousands of years. This is a Great Wall of China. It's financed partly by state lotteries. There's a lot of things in Sweden that's financed by lotteries in many countries in the world. It's been seen as a fair taxation by the population. So if you look at the industry, if you look at from a climate perspective, long-term perspective, gambling will always exist in one form or another, and now technology, since the last 20 years, has sort of disrupted the industry. Now re-regulation happens, which creates a cloud of the industry and uncertainty of this sort of what's the profitability for you as an investor. I fully respect that perspective, but I'll try to educate you a little bit of our perspective on what's going on. So looking at gig then, we are a very ambitious company, given that we have many business areas. We're covering a lot of parts of our business is targeted towards business to business. That's including a platform service that we help online companies to sort of fast forward themselves into a digital environment. We also provide sports betting services, media services known as affiliation, where we help even competitors to ourselves or others to get new clients, or other companies that would like to work with us on the media services thing related to marketing. We also do managed services. It can be everything from customer service to strategy to CRM, etc. And then also we have a business to consumer side of the business, where we have our own brands, where we are targeting certain geographies to make a business out of that as well. For those of you are following us, we appointed a new CEO in connection with the Q3 report. It's someone who we are very happy about, given he comes from our own ranks. It's Mr. Richard Brown. He's been in the industry for more than 10 years, most recently as the COO for our own company. He's well liked. He's the profile we're looking for to create value creation for shareholders going forward. So very happy with that announcement and what we've seen so far from Richard and the management team. So gig, shortly, we're about 650 employees. We have offices in Malta, Denmark, Gibraltar, Norway, Spain, and US. We have licenses, Malta, UK, New Jersey, i.e. US, Sweden, Germany, Schleswig-Holstein, Spain, and Romania. About a lot of movements here, but roughly 60 million euro in market cap. We, as I said, also listed in Oslo as in Stockholm on Nasdaq. We have 4 B2C brands and about 34 customers on the B2B platform as of today. Looking at the market then, so we are standing in Scandinavia, or in Sweden in particular today, where the penetration of digital or online gambling is one of the highest in the world. But however, looking at it from a global perspective, and why I say global perspective is that GiG has good global capabilities and clients everywhere from New Zealand to the US to Scandinavia. So if you look at from that perspective, it's still relatively early days, where the lion's share of gambling is still done through sort of physical analog channels. But if someone turns 18, and many countries in the world are allowed to play and gamble, they wouldn't go to a retail outlet, they will go online. So the underlying dynamics will continue, and someone like GiG is sort of a catalyst and fast forwarding this development as we help the likes of land-based casinos to fast forward themselves into digital environments. And we think that's going to be a very sort of interesting space and a nice segment for someone like GiG to create value going forward. The world is big, and there's a lot of movement given the transformation. People have better handsets, which is sort of where the industry is moving, more to mobile. And there's re-regulation sort of in the making in a lot of parts of the world. So it creates a lot of opportunities for someone like GiG, but also for many of our competitors to sort of look at where's the next big thing. And as I said, we have been successful both in the US, where it's so state-by-state re-regulation, but also in APAC, in New Zealand and elsewhere. And that's the way our sales team on the B2B side are looking at things. We're looking at things globally. Where can we do good deals? So we're out actively, globally, looking for good sort of joint ventures for our B2B platform services. Looking then what we're doing in the company right now, after the Q3 report, or in connection with the Q3 report, we announced that we are going into a strategic review with the company, even though we like that we have a broad scope, that we have been very ambitious, but we also think it adds complexity to the company. It's difficult for you as a potential investor or existing investor to follow the business. And also the way we allocate cash and capital investment, we want to have less complexity. So we have given different advisors a broad mandate to look at is there market appetite for some of our assets or joint ventures or what have you, in order to drive the business easier, but also creating shareholder value. Also, the industry was somewhat negatively surprised with the market dynamics in Sweden short term. Also in the UK has been some developments that are not so favorable for the industry. So we are adjusting to the new reality. We are reallocating marketing funds, etc., and focus areas, etc. And in general, we are having a big discussion on how we should invest going forward in order to drive shareholder value. That could be the sportsbook or other areas where we think we want to see better progress, as we have seen so far this year. So the objectives is really to identify value-creating opportunities, reduce complexity, improve efficiency, strengthen our strategic position, and drive our ability to execute in all areas. So we think we're actually in a very strong position. We think the industry itself is good if you look mid to long term, and that we have a strong position and credibility. However, we want to sort of make the foundation for the company better by reducing some of this complexity we have in the business today. So we are reducing cost. Here you can see on the right-hand side the trend when it comes to headcount. We have also stepped out of some of the investments. We had a studio called GiG Games that we felt didn't really progress in the way we felt was necessary. So that was divested, saving us some money going forward. We're also having a lot of focus on our tech platform, reducing costs that we expect to materialize next year. Also, we have reallocated funds into geographies for our B2C side, where we see better return on investment, moving away somewhat from some of the Scandinavian markets and the UK to other more promising markets. And in general, sort of driving through efficiency through the entire organization. Zooming in on the financials, this is high level, the Q3 results. I will zoom in on the business areas so you get a better understanding of what's going on, starting with the B2C side of things. Here you can see that we adjusted to new reality. This is Q3, Q4 last year. Then this was predominantly affected by Sweden, was negative surprise for us and for many of our competitors. So we took down reallocated marketing, and we're pretty happy that we came back actually with a relatively healthy results already in Q3 by being agile and reallocating funds, marketing to countries where we see better return on investment, even though we're trading on a lower revenue than we were in Q4. Media services, that's the affiliation. It's a very profitable part of GiG. We also see the impact of Sweden there, that the player values has gone down this year in Sweden. We'll see where they trend going forward, but we've seen an impact, even though we have still very high profitability. We've seen the impact of Sweden in this business area as well. However, in these revenue numbers, it's a very mixed bag of very strong growth, some areas very promising, new things. We even have, as some of you know, started in the US with some media assets. So this is also an area that we are sort of reallocating, looking at where should we spend our focus going forward to protect and drive value in this very valuable area of GiG. Platform services, where we offer services to other brands. We have also seen an impact of the white labels. Those who had exposure to UK and Sweden had a negative trend this year, which then affects us, given that many of our contracts historically has been on rev share. So we also seen that impact on re-regulation short term. However, this is one of the areas we see very strong potential for us going forward, and we are one of the sort of most credible brands out there, given that we can win brands like Hard Rock in the US or Sky City in New Zealand. And this is where we can sort of very fast address and meet clients and deliver to clients all over the world to make them going from sort of a land-based to a digital environment in 6 to 9 months. Sports betting area, it's an area of concern for us, given that we haven't seen the KPIs that we want. We spend a lot of money here. It's costing the company a lot of cash. So we are looking at this with some fresh eyes. How can we do this differently? How can we make this profitable area and make sure that this is driving shareholder value? So this is one of the things we're looking at as we speak to address this situation. So the company is very busy with a lot of action points to make sure that we are focusing on driving shareholder value, and we're quite happy actually with the progress. I just came from Malta, that we had a board meeting yesterday. Good progress in everything from overall group level to B2C to media to the platform to B2B sports. So these things are very closely addressed by management together with the board to make sure that GiG comes out of this sort of new reality in a good and stronger way going forward. To summarize, Gaming Innovation Group, GiG, compared to many other in the industry, we have a global position. We have delivered on this opportunity, providing services all through the world, APAC, EMEA, Americas. This year is a tough year for the industry. You can see evaluations going down for not everyone, but for many. Just in this new reality, creating uncertainty where the industry is going. However, we feel that we are well positioned. We need to do some kind of tough decisions, focusing, reducing complexity, maybe sort of stopping some things we have done in the past or divesting them in order to protect the company and drive shareholder value going forward. Because if I look myself on my experience from this industry, working with many different companies, there's been actually a lot of volatility. If you look at valuations in the past 20 years, dramatic shifts, often triggered by re-regulation. I remember when the US came from a situation where it was unclear. Everyone thought legally that poker was a game of skill that was legal in the US, whereas sports betting was clearly illegal through the Wire Act. When that was cleared through the Safe Harbor Act, valuations came down dramatically. I also remember myself working for Unibet when France re-regulated, which was the best market we had at Unibet. But you have to accept this is the dynamic of the industry. It's going through re-regulation. And for those who sort of are pointing fingers or are upset or angry, you know, that's not very helpful. You need to adjust to the new reality and see what's new now, how can we make money and drive shareholder value given the new dynamics. And that's the approach of us. Because if you look at our B2B side of things, the more re-regulation we have, the more opportunities we have to help land-based casinos or other strong brands or other assets to fast forward themselves into this new reality. So we have a lot of opportunities to drive value, also in a regulated environment, and that's our approach. And where on the B2C side, we see more challenges in some geographies, We just accept the fact that we need to move out of certain markets or shift the way we think about marketing. So that's the attitude you need to have in this industry, because it is a growth industry, it will continue to grow, and a lot of exciting companies are based actually here out of Scandinavia addressing the world. One of them is Gig. Thank you.
All right. Thank you for that presentation, Petter. Gig is sort of a unique gaming company, given that you have exposure to that many verticals within the industry.
Yeah.
Now, when I look at the segments, when you look at the first two segments and you add the earnings for those segments, for example, Q3, you get to almost 7 million in EBITDA. But then you have the two other segments, the sportsbook and then the platform services, and you add that, and then you get down to the group figure, which is 2.7 million. So you talked about that Gig now has initiatives on improving profitability in the other two segments. Could you elaborate on that, and also with respect to timeline? For example, on sportsbook, when do you expect to break even, and how can investors be confident that you will reach those targets?
Yeah, so we start with sportsbook. We have said that during next year, or preferably first half year, we should be profitable sportsbook, either through sort of organically or addressing it in a different way. If you look at the industry, 20 years, and even today how we work, you can also think in terms of ecosystem. The beautiful thing in this world that you can do a lot of partnerships in one way or another to reduce costs and share costs, to create more scalability. That's one avenue that we're entertaining. But one way or another, we'll make sure that next year the sportsbook is profitable for us. We don't find these numbers acceptable, and we understand if shareholders agree with us on that point.
But
on the sportsbook we're talking about.
Yes, just following up on sportsbook, because of course you have obligations, you have signed deals on sportsbook. For example, you have a large partnership in the US with Hard Rock and then delivering sportsbook services to them. Are you in any way obligated to deliver service to them such that your hands are tied?
You know, when you work like we do with our clients, we are in daily, hourly contact. We become almost friends because you work so intimate. We are part of the blood system. So these kind of discussions, of course, are very transparent, and it's subject to their approval. If we were to make any changes, new, fresh way of thinking, they are definitely it's subject to their approval, and we are very transparent about it. That's something we do in collaboration. And so far, the signals I'm getting, it's very possible to do changes if we would wish to do so. So we don't see that as a blocker.
Okay. And then the platform.
The platform is somewhat a different answer, because we see it as very strategic. We are going through an investment phase. We are, for example, running on 2 platforms right now. So hopefully during next year, and that will be more the second half year, we have sort of consolidated that, and we see that we can save a lot of money, everything from sort of cloud services to having some double functions and so on and so forth. But that's the long play, where we think that we can sort of really drive shareholder value, adding sort of new brands on our platform. So that's an area that's we're going to keep on investing, but more cautiously. And we know there's a lot of, and I've listed some saving opportunities there, given that we have been very ambitious, and we are sort of getting closer to a situation where we can consolidate into one single platform. But a platform service will always need investments. It's a dynamic world, so it always needs some investment, but not in the pace that we have done it in the past few years, I would say. And again, the world is moving so fast. There's so many good entrepreneurs in this space. So every year there pops up new potential partners that we can share sort of competence and plug it into our basically horizontal thinking, where we are turnkey solutions for our clients.
Looking at Gig from a group level, so you delivered around 9% EBITDA margin now in Q3. For 2018, it was 11%. But you have assets such as the media business. It does 50% margin. The platform business should be a high potential margin business unit. So what kind of margins do you expect Gig to have the potential to reach in, say, a 3 years' time if you execute on your strategy?
We haven't guided on that, but as I said, and if you read between the line, the board and management clearly are aiming to improve the margins going forward, and we think there's quite a few things we can do at our sort of hand. The costs are easy to address. Revenue is more, it's subject to what happened in the market. But overall, the ambition, of course, for us is to improve the margins, but we are not guiding on a particular sort of threshold or number.
All right, fair enough. And one last question. We have focused a lot on sort of cost initiatives, profitability, but pivoting towards growth.
Yeah.
You mentioned US, you touched upon it,
yeah.
and you are also expanding into new markets such as Spain, Croatia.
Mm-hmm.
Can you talk a little about the growth opportunities and also how expensive will that growth be for you guys?
Yeah, so as you heard me, I came in December, and I started my career after my business degree working for Kinnevik, and when Jan Stenbeck was alive, and he had a very fresh, I think, approach to profitability. It's where you can make good money, make good money. Just because a country or something, everyone's running to it, maybe you should run somewhere else. I remember when I worked, I was with Young Trainee, everyone was questioning Millicom. What are you guys doing in Africa, Latin America? Are you crazy? And no one really questions that in the past few years. So we have a global approach. I look at every potential deal from a deal perspective. Is this good for gig or not? We shouldn't be dragged into this kind of sentiment that because of excuse my French, investors rather think, oh, everyone should go there, or everyone should go there. What happens is that everyone goes there. Maybe we should go somewhere else. So our approach going forward on the platform side of things is to make good deals.
Yeah. Yeah.
Profitable deals.
Yeah.
More joint venture spirit.
Yeah.
I'm not going to accept, if maybe there's some exceptions because of signal value of certain deals. But it's better to make good deals in a country that few know of than to make a really crappy deal in a country where people think it's a cool country for some reason. We're here to make business and drive shareholder value. So we're going to be that's the filters. Yeah,
very good. Very good. I think we'll stop there. Thank you very much, Petter.
Thank you for having us.
Yes, thank you.
Thank you.